Rightio. So, as I said before, Ty's not in tonight, so we're not doing any fundamental news or anything. We're just going to jump straight into markets and then get into the lesson. So, at the moment, we did this chart up on BTC on Tuesday, I think it was. We've hit our supply target and we've got a nice drop. There was a short-term target here, which we've seen to have held and bounced off at the moment. So, we never hit our final target back to this previous bottom, but that was still a 9% short. So that was a really successful trade. Jack posted up a chart today, I think, in the scalpers page. I think he was loading up on shorts back on here. Obviously this little square up pattern here. I'll jump in on the smaller time frames here. So yeah, you can see how we're just doing these Bart Simpson formations or the square ups. Every time we get a drop, we get a pullback back to the consolidation until the market sort of picks a direction that wants to go in again, and probably will drop back down to here. So keep an eye on it. I still reckon we're going to come back down to touch on this bottom again at 3.5 or around that area here in the 3.5 zone before we go for probably another swing within this channel. So we've sort of located now a decent channel to swing. I would say, I'll get rid of this. I'd say we're probably looking at that sort of supply and demand at the moment. So I reckon what we're probably going to see is a touchdown back down to 3.5 before another movement up in this direction. Now, I have mentioned already that loading up on longs right now is not that ideal, only because there's every bit of chance it will bust through to find this next low. So I'm playing the short game at the moment. I'm not really setting longs. I'll just ride the longs up in BTC and then set your shorts down. It's just too risky for me. As much as you can capitalize on these movements, I just think they're very risky. For example, if you set a long down here and you're going to sit on it on low leverage, bang, you would have been back out. So just, yeah, play the short game and just hold your BTC on the way up. If we do get bullish movements, then of course, yeah, you can play short-term longs, but stick with your lower leverage and move your stop losses up so you can take profit when you need to. At the moment, I'm still pretty bearish on BTC, and I still think we're going to touch down onto the 3.5 if we do break through $3,000. Otherwise, we'll probably bounce around this channel for another couple of weeks, I reckon. BNB was another one we charted up the other day. I know when I did the chart for you guys on Tuesday, it was already a little bit late, but price was still being held, I think, around here somewhere. So we still did get a nice jump from that signal the other day out of this descending triangle. I think so. If we put it sort of, I think we're going to buy on the pullback there. So it was still a 25% trade to the top. And it looks like this market consolidation here is now going to hold as support. If it doesn't, it may come all the way back down here again. So I'll get rid of this for now. So yeah, we're looking for this support here to hold at the moment, but I don't know, looking at on the 4 hour, looking at the MACD and the RSI, it could well bust through this and we could maybe come back down to this supply zone here. We run fibs off. That's bang on the 61 as well. So keep an eye on this. If you've already jumped out, that's fine. Maybe look to rebuy on the 61. If that doesn't look like it's going to hold, we may be dropping back down for a full reset. Although there has been some good fundamental news around BNB last few days, which I'm sure you guys have seen, talking about the accommodation thing. I can't remember what it was now. I did read it the other day. We'll find a link for it. I think someone else posted a link in the fundamentals anyway. So yeah, not a bad trade on BNB. Stay clear at the moment. Wait for that pullback. And if it holds on the 61, we might get another push. Driven by the fundamentals. Ethereum. We're still trying to head towards this other bottom, so I reckon it's still a steer clear or play the short game. If you are on BitMEX, let's have a quick squizzy. It's a bit hard to chart with not a lot of data on the daily. Yeah, so sometimes it's hard to chart on the BitMEX charts on futures contracts because you don't get the market data, so you can't find the bottom. So I sometimes use Ethereum BTC on Binance, or if you're going to use USD, you can use Ethereum USD on Binance, and that'll give you a better indication of where you might find entries or shorts. But that candle there will get squared up, so we'll definitely come back down here, even though we're still relatively oversold. VET is interesting. I mentioned this a couple of weeks ago now, with a prediction that this will flatline and possibly pump out of the Ichimoku, and just to keep an eye on. Actually, I think I made a note on this thing. Yeah, wait for 3 confirmations on the Ichi. So we're just starting to now pop out. The candles are starting to pop out of the clouds, and you can see. I'll get rid of that. The current predictive cloud is still bearish, but we're pointing upwards. Okay, so this is kind of a no trade zone. This could be a consolidation because there is somewhat of a channel here right now. So we could bounce around in this channel, but the fact that we've had a heavy sell-off and a consolidation, if the market does start to pick up, I reckon we're going to pop out, and this could be a decent trend to trade. So if you're going to keep an eye on VET, use Ichimoku and wait for the confirmations on these clouds. Stop doing that. Oh God. Because yeah, I think there's possibly a trade in here. It was pretty much a double bottom with followed BTC, and it's held up okay. So keep an eye on that sucker. Quick look at the market cap. It's still pretty average. Everything sort of copped another bit of a beating today, some worse than others. Bitcoin Cash is still a bit of a stay away zone, although if you're playing on MEX, there has been a few good options or opportunities to short. Here we go. Yep. So it looks like a square up here on this candle, chasing the money. So it's pretty oversold at the moment. I dare say there's going to be a bounce here, but again with BCH, this is one that I would not be longing, even though it's fairly it's very oversold on the 4 hour, and we have touched down on that square candle. I'm still not going to long this sucker because with all the shit going on with the BCH and stuff at the moment, it's just a stay away zone. Like, yes, you can play the short game because there's probably a better chance of it going down than it is going up. But yeah, I'd be wary on longing it anytime soon. EOS, did we have a look at EOS? EOS we did a chart on the other day as well. I'll go BTC. And of course, my chart is reset. I think I had a possible entry zone. Actually, I know where it'll be because it was on a previous candle. Let's go to daily. So it would have been something like that, I reckon. So we're currently in the buy zone at the moment, although it's still pretty bearish. We're very oversold. There's lots of wicks to the downside, but we're still in a very steady downtrend. So if we put on Heikin-Ashi, that'll show that we're in a very steady downtrend. So what we're looking for is the trend to start slowing its momentum. As you can see, the candles are they were big there on the big sell-off. They look like there was a bit of consolidation, but we've sort of kept a very steady trend. Although it's not a strong trend, it's a steady trend. So what we're probably looking here is for divergence. So if you are going to chart EOS, chuck your CCI on. Oops. Okay, and we're trying to find divergence at the moment. Now there was already a slight divergence here with a higher low on the momentum and a lower low. Where was it? There. So we already had divergence, but it's busting through even further. So what we're looking for is the next line of divergence. So when we did that lesson, you guys would have noticed that sometimes it works just on two single points of a rally, but sometimes there's a third point. And now if we get a third point, which is a higher low on the momentum scale, and we still get another lower low on price action, then I dare say we're going to see a reversal. I'm not too sure. This sell-off to me seems fundamental. It was pretty harsh. I don't know what the fundamental side of it was. And we could see our previous bottoms again, which was, we could sort of there is always a possibility that we come back down to this sort of market structure here, which is a fair bit lower than we are now. So I'm still not suggesting buy it right now, even though I had a trade plan set up here, something like that. I would not be taking a position yet until you see the confirmation of the reversal. So right now we're seeing that there's a possibility for a reversal, but we haven't seen the reversal take place. So the possibility is the divergence, but it hasn't taken place yet. So keep an eye on it. We might get an entry down here. So what we're looking for is a higher low on the CCI and possibly a nice lower low on price action. And that will probably be our entry point as long as we see confirmation of a bounce. So you're looking for like wicks or maybe a double bottom or something like that. It could be fairly violent, and we'll get into that a little bit later regarding trading for reversals or reversal strategies. It can be a violent move, and it's also risky, but it could pay off quite well. So keep an eye on EOS. Don't enter just yet. Bitcoin SV. BSV. Is that what it is? Yep. It's obviously something else on thingy. Yeah, it's not much market data to go off yet. And again, I'm staying away from these guys while they sort their bullshit out. Everything else has pretty much copped a bit of a flogging over today. VChain, as we went over just before, it's found a nice bottom consolidation. You can almost see on here, we've got like a bit of a triple bottom happening with a good rejection off support. So keep an eye on VChain. We could start to see a nice trend to start trading soon. And we'll get into trend trading shortly as well. Everything else is still on the steady downside. Waves has finally had a sell-off. So that was one I've been keeping an eye on. I never took an entry on it, even though I looked at it days before going, gee, this has got a steady climb on it. And then it just went kaboom. So it's done 134% over the last couple of weeks. I was looking at it here on this steady climb going, wow, that's a nice steady climb. That's good growth. Never took a position, and it went crazy. So we're just finally seeing a sell-off now. You'll probably find that lines up with a bunch of resistance. Yeah, probably sort of around here. Or if we're looking for supply, it would probably be this guy here. So that's current supply in control. And you would maybe, if this is a sustainable push, I don't know what the fundamentals are for waves or why it did it, but someone's commenting now. Waves had a new wallet release. Well, that's definitely a reason you would pump at 135% because they brought out a new wallet. So generally that a new wallet release is going to be one of those buy the rumor, sell the news things. So this would have been buy the rumor. That would have been it whacking out. Now they're selling the news. So, or now that it's actually been released, there's the sell-off. So be wary. You kind of want that 61 to hold. I highly doubt we're going to see a bounce straight off. So you want to see the 61.8 hold. If it breaks through that, we're going back for a reset. So I wouldn't even touch it. It's a bit of a FOMO move, to be honest. BAT. Always like BAT. And let's have a quick squeeze. All right, now this is interesting. So we charted this one up a couple of weeks ago. We found this really good tradable channel. We've got 3 touches in it. Broke through. We're waiting for the push back to previous highs. Never was sustainable because I think we had a bit of a drop in Bitcoin. So it held in this supply zone and then it's busted through now. So if that's the case, we know that this is already a fairly strong demand. So the demand shoots back here where we had a really good push out of the market. So that tells me this is a very strong demand. Back when this was the pre-release of the Coinbase Pro listing. And you can see these wicks to the downside have progressively gotten higher and higher. So it's almost as if the demand is getting stronger. Each time it's had a push, the demand's gotten stronger. Now that we've broken back down through this supply, I would be interested in possibly taking another entry back down on this demand here. So we could see a drop over the next few days, and then hopefully we get another bounce in this tradable channel. Now, this kind of breaks the rules a little bit in terms of we normally only get 3 to 4 trades out of a channel before it's compromised. We can see this supply has already been compromised now. So The reason I'm thinking about possibly taking an entry on this demand is, to me, in my opinion, this demand's held strong and the supply is weak. So I'm going to take an entry on demand and hoping that we're going to bust through this supply, because I know it's already been compromised now anyway. There's a good chance this will go higher, but even still, this is a 20% channel to trade in. So that's a nice, healthy channel. And BAT now has a decent amount of volume. It's high in the coin market cap. We're up to about 5 million, which isn't too bad in the current market sentiment. Factum I've got no idea about. Lisk seems to have bottomed again, but I'm not going to touch it because it's finding new lows. DX, Verge, Cycoin. Someone just said something. And BAT have a good working product, correct. And when we get into the trade plans, that will sort of come up as well regarding working products and things like that. It's one thing that will make specific coins stay around in this whole bear market as well is coins that actually have a working product that are sustainable. So a lot of the coins that are currently out there are still in work in progress. They're vaporware, ERC20 tokens, haven't had their mainnet launched. They haven't actually developed their blockchain yet, just a promise to develop their blockchain. Some of those companies, when they run out of money before they've even launched their product, will bail. Whereas companies, for instance, like BAT or VeChain and things like that, who have actually already launched their product and it's actually working, will probably be around for a while because their product should technically be sustainable as long as they're working to the way that they're sort of designed to. So I'm bullish on BAT. When there's a good entry on BAT, I'll take it. And ZRX is also another one I'm very bullish on. ZRX. And we have a nice channel at the moment on ZRX as well. So possibly another entry on this guy very soon. Let's chuck on MACD and RSI. Yep, doesn't look too bad. So a bit of a sell-off here, supply. And the demand's probably this guy way back here. Maybe. We've broken through that. Okay, something to be wary of. There is a demand here. That's where the original demand is, or the sort of midterm demand at the moment. And we have got a tradable channel, but we have compromised this demand. So it's been retested and held here once. Will it hold again? I don't know. We are starting to get a little bit oversold. There's no real clear divergence. If you zoom in a little bit, you can see we've got lower lows on price action and lower lows on the moving, on the momentum scale. So it still says to me that it's just in a steady decline. We'll be looking for a bounce around here somewhere. Might be worth putting some cheeky low buys down the bottom of this demand, but be prepared to drop it in case it does go for a market reset, which is back down here. I don't know why I've got that box there. Yeah, market reset back down here somewhere if this demand fails. And that's still a 10-15% drop. So you don't want to be holding those bags. That pretty much wraps up the market update for now. If we get time later on, we might have a quick scan, or if anyone has anything they want to add now. Yeah, Mungie said, check out ONT. ONT. Oof. Okay, so we were looking for a bounce here at some stage, and it hasn't come. Let's check the daily. Okay, it can go lower. That's all right. So I was looking at that candle there. It may actually be this guy here that's in control. And we've almost touched it already, and we did get a bounce there. So there's quite a possibility that that may be the new bottom down there. And that's almost a full factory reset as well. So that'd be interesting. It's had a big sell-off. And ONT is fairly popular and high volume, so keep an eye on that sucker. We're looking for a rejection off support or a solid bounce, and then this should be good for a trade. chuck on Itchy and see if this is losing momentum. Yeah. Using Ichimoku, that says it's still in a very, very, very strong downtrend that doesn't look like it's slowing down anytime soon. So the only reason that would change is if we got one of those ridiculous, 20, 30% 4-hour candles that just went boom. Otherwise, that looks pretty daunting. See if we can find divergence on the 4-hour.
Hey, Donnie, Smalley's just said here, when you say demand, is that the previous push through a certain channel?
Correct. So when you've got consolidate, it's a bit hard to see it on the daily. I'll put it on the 4-hour. So when I'm looking for previous demand, I think Smalley, you're fresh to this course, aren't you? You didn't do the last month. Is that right?
There's plenty of content available from the pre-recorded stuff.
Yeah, if you check out some of the other videos, you'll find we've done a few lessons on supply and demand. It's a very, very strong tool for swing trading. And basically what it is, when you get a consolidation like this sort of area here, when you get a push out of the market, I'll zoom in so you can see, try and identify the specific candle. So we've got consolidation here, and then we get the market direction is up. So somebody decided that we were going up, and you sort of put your box or zone around that specific candle. You can play around with it. You can go from the wick. You can go to that previous wick there on that red candle. You can bring it up to the touch on that wick there. You can sort of play around. It's open to interpretation like most TA is. It's nothing that's correct or, directly going to be the same as everyone else, but it's all about your risk to reward. You don't want to have your box like this because you'll be buying all the way down it and you stop, or if you're buying at the top, your stop loss will be way down here. That's way too much of a risk. So you would tighten it up a bit to something like that. Now you can see here where the market pushed out, we come back for a retest. So that almost tells me that the demand is almost as high as that. So this was the candle that decided the market needs to go up. As the market returned back from the sell-off, it hit this demand and bounced straight back off again, which tells me that there's lots and lots of buyers down here, or there's plenty of investors who are quite happy to buy at that price. So once we have that demand located, we can go to current price action and find how well that's been respected. And you can see here, this is months later. This is like 6 months later. Bang, we hit that demand again and we're off. Does that make sense, Smallies? So we've located demand over here. Before we even saw this, we've located demand. 6 months later, we've come back to that price and gone bang, bounce off again. So you could have set buys down here knowing that this was your demand and got an instant, 130% or whatever it was. Now we've come back down and we've hit this demand, but we didn't bounce off. So does that tell you that that investor or the whale is gone now, or has he possibly got his buys a little bit lower? This is why it's risky. So you would have your buys set in here, but if it doesn't hold, you would sell and wait for a confirmation to see if we're going to go any lower. So then you start looking at resistance or support, I should say, at lower market structure, which could be, back down to a full market reset if you're going to go to the wicks, but I'd probably go to this market structure here. So we could go as low as that with ONT, which is still 15% down from where we currently are. So, it's up to you depending on how long-term you are on specific coins, whether or not you want to average in or just wait for the bottom, or try and take a position off the bottom and hopefully you catch it, or whether you, wait for confirmation and then jump in. There's many different ways to trade it. For me, I would be waiting for confirmation at the moment because the market's just too risky at the moment to just take stabs in the dark and chucking low buys on. Like, you got to be pretty confident that there's going to be a rejection there. Otherwise, you're going to be holding bags if you don't have a trade plan in place. Ion. Someone wanted to have a look at Ion. Where are we? Let's check out the daily. Yes. Got a whole lot happening. I'm not liking the RSI for the price action. So one thing that that scares me a little bit is the fact that we were oversold for, like, this is on the daily, mind you. So daily oversold is a pretty powerful indication as well. And we did get a rejection off here being so oversold, but we didn't go anywhere. So that's a bit scary. That tells me that there's not really a lot of interest at the moment in ION. So fundamentally, they may not have anything going on. There's no reason anyone wants to invest in ION right now. So that's a bit of a stay away from me. And the fact that there's no more market data there, I'll just see if there's any other markets available. No, only Binance. I would be staying away from ION right now. There's no market data to try and pick a bottom, so it's just throwing darts in the dark. You know, you're just guessing that that's where the bottom is. No idea. I think that was about it. Yep. All right, cool. No more questions there. We're going to jump into tonight's lesson. Now, there's a couple of parts of tonight's lesson. We are going to go over trade plans shortly, which sort of coincides to what type of trader you are. So this is something that you guys have probably never asked yourself before, or maybe no one's asked you, or you maybe didn't even know that there was different types of traders. So question is, what type of trader am I? I'll just get rid of this because it's a bit annoying. Okay, there are many aspects to trading that are often overlooked. Without clearly identifying what type of trader you are or what type of trading suits your commitments, you can sometimes find yourself making a lot of mistakes as you aren't planning the trade correctly. There are 4 main types of traders and many styles of trading strategies that fit into each of these categories. You got your scalpers, your day traders, swing traders, and position traders. So they're the 4 main categories to, the different types of traders. There's probably people will mainly fit into those 4 categories. Now, you can be a scalper and a position trader, or you can be a scalper and a swing trader, or a day trader and a position trader. It doesn't really matter. They're just different forms of trading, or the way you apply your TA and take a trade or apply your trade plan. Generally different amounts of time frames and things like that. But we'll get into each category as we go. So you're not always one specific person and not the other. You can do multiple, but I think it's important to identify these 4 main factors so that you can plan your trades accordingly, knowing what type of trading you're about to do. So there's no point employing the same methods that you would use, say, scalping, if you're about to swing trade a channel. Okay, so there is different forms to really looking at your trade plan. Okay, so with scalping, you'll tend to only hold trades for a few seconds or maybe minutes. The main objective is to use higher leverage and catch small 0.5% to 2% movements many times throughout the busiest part of the day regarding price action. So for us, this is, on BitMEX at like 10 o'clock till 2 o'clock in the morning when there's lots of price action. You're just doing those little trades in and out, locking in 10, 20, 30, 40%, whatever your leverage is. Generally at this, as I've sort of warned you guys before, at these sorts of price action we're getting at these levels, probably lower leverage is a little bit better. This type of trading requires constant supervision and is only suitable for traders who have the time to sit there for a few hours a day and being quick to execute the trades. So there's no point trying to scalp if you're at work. You're not going to be able to concentrate, and you'll most likely either fail your trade or get in trouble at work because you'll just be, not paying attention. You've really got to sit there on the computer and pay attention as you trade. You don't just put a trade on and then go make a coffee or, go out for a jog or whatever. You've pretty much got to sit there. This type of trading requires very basic tools for technical analysis, generally trend lines, support resistance, and RSI. It's also important to have targets in mind before placing your trades. And the most important emotion to conquer is greed. So you'll probably find, I think, in Jack's corner, he's sort of mentioned a few times about not getting too greedy when you're trying to scalp. And that's because because you're trading such small time frames and the market cycles are so rapid, you're trying to lock in small gains. So you need to trade it, get your gain, and sell. Get your gain, sell. Get your gain, sell. You don't sit on a trade and let it go up and down, up and down. You're wasting opportunities. You don't want to overcomplicate things either. which is why I say you just use support resistance and trend, just basic trend lines. So you're looking for breakdowns or breakouts and things like that. And, you know, on the 5-minute time frames, you're probably looking at the RSI to see if we're oversold, because there is mini cycles on the 5-minute time frames. So yeah, that's one type of trading, and that may not suit you. If you don't have the time to sit in front of the computer for 2 hours, well, then you probably don't bother even trying to scalp trades, because you can't commit to it. Okay, day trader. Day trading is very similar to scalping. With day trading, you would normally chart first thing in the morning or the previous night to find entries and possible targets to reach towards the end of the day. Trades would generally be executed at the beginning of the day and would hold the trades close to the end of the day. So this is more suited towards, say, ASX and things like that, where they have an open and close period. And you'll find on Forex as well, when you look at the volume indicator, you can see how the volume sort of progressively gets higher towards the end of the day, and then there's a big drop off at the close. So this is more suited for that, whereas crypto is sort of 24/7. So you don't really get a close at the end of the day. But if you pay attention to the world clock, you'll understand that most of the price action comes from America, and that's generally going to be, 10 o'clock till 2 in the morning, 3 in the morning, or even 6 o'clock in the morning sort of thing. So for us Aussies, day trading would probably be more like maybe looking to set some trades in the afternoon and probably looking to close them, early morning or first thing in the morning or something like that. Normally, day traders would not hold trades overnight and simply hedge to their base currency overnight. For day trading, we're missing a little bit there. For day trading, you basically use a combination of technical and fundamental analysis. So sometimes the market's still driven by fundamentals. So you might be placing your trade based on an announcement that's coming up or something like that. So you're trying to catch that pump. Now, when I say you would normally not hold your trades overnight, again, this is sort of referring back to the ASX and stuff like that, when there's the market close at the end of the day. So you wouldn't hold your trades on overnight. You try and catch the run up during the day and then close your trades. So for us Aussies with crypto, you would more so be opening your trades midday or in the afternoon for a nice entry. You would get the pump throughout the American volume, and then you'd probably close your trade there and enjoy the rest of your day sort of thing. So you're just catching that price action. Okay, swing trader. Now this is probably more suited to most of you guys, especially if you're not full-time traders or willing to stay up late at night. Swing trading is for those people who like to hold on to trades for several days at a time. This type of trading suits people who work full-time and don't have the time to monitor their trades throughout the day, and typically only do analysis every morning or at night, or maybe once or twice during the day. This type of trading requires both technical and fundamental analysis and will generally use a broad range of tools for charting. Supply and demand being a strong tool for identifying tradable channels, Ichimoku for identifying strong trends, and Fibonacci extensions for finding possible targets to hit. Now, a lot of you guys probably haven't done Fibonacci extensions before. A lot of people use Fibonacci retracements for finding pullbacks and things like that. But Fibonacci extensions can be a very powerful tool to find targets that a lot of experienced traders will be trading towards. So there's sort of some basic tools you'd use to identify, possible swing channels. Maximum gains for minimal loss is the key to swing trading. Locating bottoms or demands, taking a position, and then waiting patiently for your targets to hit. So you've got to sit there and cop a few ups and downs, but your idea is to be buying at the bottom, at the bottom of the channel, and selling at the top of the channel. So you've got to understand that there's going to be pullbacks and there's going to be sideways movement and there's going to be a down edge and then there's going to be another up edge and a pump here and a drop there. But your idea is to hold that trade from the bottom of the channel to the top of the channel. So you've got to have a little bit of emotional detachment to ride the swings until you get to your target. So you're still got to be confident in your TA. So obviously it helps to identify the channel to begin with, and then you're good to go. Now this suits my commitment, and this is why I say it probably suits a lot of your commitment as well. And it's why mainly my strategies and teachings have all been on swing trading because I think it resonates with a lot more of you guys. Now, position trading. Now, this is more so investing. So position trading or long-term trading is for people who don't have the time or the desire to trade on a daily basis. And generally, a position may last weeks, months, or even years at a time. This type of trading requires both technical and fundamental analysis with a lot more emphasis on fundamentals. So this is more of the, when people say they're hodling or long-term holds and things like that, that's the position trader in you. So it's more of that long-term investment. So there's a coin or a project that you're really bullish on. The price might be shit right now, but you think long-term it'll pay off. So you're not too concerned with the price of it, but obviously you still want to use some technicals to find where it is and where it may go and what your targets are and things like that. But you're not really going to be, you're going to have that emotional detachment to not really care about what it does over the next 6 months. You're thinking long-term. You would use very basic technical tools like supply and demand and Fibonacci extensions to ensure that the price is right for an entry. However, if the market is driven by fundamentals, you must have a lot more patience and be willing to ride the ups and downs as the asset goes through several mini cycles. So as I said, you've got to just sit there and cop it. If you're wanting to trade all the ups and downs, well, then you're not a position trader. You're a swing trader, or you're trading retracements and things like that. So this is more of something that you're bullish on, but the price is shit or whatever. You buy some, you stick it in a wallet, and you sit on it for 6 months, and then you might reassess the situation a few times during then. If things are all still on track, you'll keep holding it. If things are looking bad, with the fundamental side of things, the founders have done a runner, or one of them's up for a lawsuit or something, then you might be reassessing the situation and possibly looking to get out. This type of trading is more a form of mid to long-term investing, and it does not require constant monitoring. So you don't really need to pay too much attention to it because you're not worried about the ups and downs. You're worried about the long-term effects. Right. So that's pretty much the 4 main types of traders. Now, as I said, you could be all 4 of these really, but you've got to approach each one a different way. So, like I said, you could be all 4 of these people. You could be a swing trader, a day trader, a scalper, and a position trader, but you need to approach each asset that you're trading in the correct category with the right tools. So you might have a portfolio that you have a couple of coins that you're holding long term. For me, that's BTC. So I'm a position trader, and then I'll swing trade other coins against BTC. And every now and then I'll scalp. I don't really day trade much anymore because I just don't have the time for it. Scalping I can do late at night when there's price action. Swing trading I can do over a couple of days, and position trading I just hold my BTC. Okay, as long as you approach the asset in the right class, you're sweet. All right, so moving on to trading strategies. There's also many styles or strategies to trade within each type of trading category. These strategies can be applied to most of the 4 main types of traders, although generally speaking, some strategies suit specific types of traders better. So there is 6 main different types of strategies, and most of them fit into a category of a type of trader, but at the same time, they can fit most categories. There are a lot more strategies in the 6 below. However, these are the more common styles, and you'll find most other styles are just combinations or edits of these 6. So they might apply 2 or 3 different combinations to a trade. So the 6 main trading strategies is trend trading, breakout trading, range trading, momentum trading, reversal trading, and retracement trading. Trend trading. Trend trading is one of the more popular and common trading strategies. It involves identifying an upward or downward trend in an asset price movement and choosing trade entry and exit points based on the position of the asset price within the trend and the trend's relative strength. Traders will often cite the phrase, "the trend is your friend," as a reminder that recent trends can be reliable indicators of where price is likely to go moving forward and where it's best to set up trade entries and exit points. So basically you would be looking to buy on the trend line and sell if it breaks trend. Trend traders use a variety of tools to evaluate trends, such as moving averages, RSI, Ichimoku, volume, stochastics RSI, and this strategy falls into day traders and swing traders handbook. Not effective for scalpers as it's too short term for position traders. So trend trading is not really something that scalpers would use because you're looking at too small a time frames to actually find trends, and position traders don't really care about trends. They're looking for long-term holds, although it can sort of still be accepted on entries. So yeah, trend trading is a form of trading on itself and should be sort of traded in a specific way. Breakout trading strategy. So a breakout trading strategy is a method where traders will try to identify a trade entry point at a breakout from a previous defined trading range or pattern. So you're looking for things like falling wedges or ascending wedges, support, resistance, or zones and things like that. You're looking for the breakout, confirmation of the breakout above or below that range or pattern to give you an entry or an idea of where price is going. So if it breaks higher from a convergent resistance, you may buy with the expectation that the asset will continue to move higher to another level of resistance. Vice versa, if price breaks a level of support within a range or a pattern, you may sell with the aim to buy back at a lower price, or simply short the asset if available. So if it's available to short, you might short it on a breakdown. If you're holding a bag of something, you might sell it on the breakdown and look for that lower entry to buy back again. This method is used a lot for scalping shorter time frames, but is still a strong strategy in any day trader or swing trader's handbook. Basic tools like trend lines, support, resistance, and RSI is generally all you need, and it's often known as pump chasers because they're just after those small gains and they're looking for the pumps. It's a strong form of trading. It's not super rewarding, but sometimes your risk to reward's not that good because the reward's not very high, but sometimes the risk is a little bit lower because you're buying on a confirmation that the price is moving. So it can sometimes be a little bit less risky. Now, range trading. So this is where I do most of my trading. So range trading is simply a popular strategy based on the idea that price can often hold within a steady and predictable range for a given period. This strategy works best on markets that are stable, have volume and predictable economies, and aren't often subject to surprise news. So I say economies here. This sort of refers, as we're diving into Forex and stuff like that, it's all the same. So this works best on coins or currencies that have plenty of volume and a stable market. So that's where we're looking for that high trading volume. That's why I always say to you guys, just look on the top 100. If there's not at least $1 million worth of daily volume, it's probably not going to be worth swinging because it will be a little bit too unpredictable. And also things like circulating supply and market caps and stuff can come into play as well because your range can blow out really rapidly if the coin has low supply. This trading strategy is the number one when it comes to swing traders, as it does not require constant monitoring and generally reaps the best risk to reward ratio. Basic tools such as supply, demand, RSI, and CCI are often used to identify quality ranging channels. So it's one of the best forms of trading strategy you can use for risk to reward, because generally your risk is low because you've identified a bottom and you're willing to sell just below your bottom, so you know that your risk is very low, but your reward's generally higher because generally a ranging or trading channel is going to be, like in crypto sense, it's going to be 20-30%. So you're risking like a 1% or a 2% drop for a 20 or 30% increase. So your risk to reward ratio is always off the charts, and it suits me because I don't like to lose a lot of money. I'd rather win 20% than 5%. That's me. And it suits me as a patient trader. I can place a trade on, and over the next couple of days, just keep an eye on it, make sure it's heading in the direction I want, and take profit right at the top. So you're taking full advantage of the swing. Momentum trading. So momentum trading is very similar to trend trading, although generally looking for reversals or strengths of trends to take a position. For example, if a downtrend is losing momentum, it could indicate a good time to take a position, and vice versa. In an uptrend, it could indicate a time to sell or short the asset. Commonly used for swing traders or position traders, although day traders will use this method on smaller time frames. So it does work on smaller time frames, but trends in itself would normally be looking at 4-hour time frames. As anything lower than that's going to be a fairly short-term trend, and is more known as noise than really a trend. Basic tools needed, such as supply, demand, RSI, CCI, MACD, and stochastic RSI. Divergence, Heikin-Ashi, and candle formations can be very powerful tools to determine momentum. So when we're saying that, we're talking about Heikin-Ashi is a strong way to determine whether a trend, or where there's a trend, and whether or not a trend's running out of steam or not. Divergence is something else. We look to see when the trend is reversing or if it's going to continue. And candle formations such as double bottoms and things like that can really help to identify where we're going to stop and reverse, head and shoulders and things like that. Reversal trading, very similar to momentum trading. So reversal trading is when a trader looks to anticipate a reversal in a trend with the aim to guarantee ideal time to enter the market. This strategy is considered more difficult and risky, as true reversals can be difficult to spot, but there's also more rewarding if they are correctly predicted. So the reason they can be risky, if we went back to that chart before on, I think, EOS, I think, we saw divergence on EOS. So if you were using, this is why they say it's difficult and risky, because if you were just using that divergence, you would have taken a position already, not realizing that that's not the bottom yet. Okay, so it can be risky because you're generally putting on lucky dip buys, thinking that this is the reversal, but it hasn't actually reversed yet. So if you're buying before the reversal, it's risky, but it's going to reap the highest rewards, because if it's a bottom, you're going to be buying it at the bottom and you're going to get that instant 20-30% bounce within one candle. So it is very rewarding, but it's risky, because if you don't get the bottom right, then you're going lower. So, and sometimes the lower might only be a little bit lower. So if you trigger a stop loss, it might only drop another 1% lower than your stop loss. So it's risky trying to find the bottoms. This type of trading suits day traders and swing traders. It requires concentration and planning ahead of time, and can sometimes be fairly quick trades to execute. So by being quick, it means, and planning ahead, you need to locate these reversals beforehand. You need to find where the possible reversal is. You're going to place a trade, and then if it does reverse, it's going to be a fairly quick trade to execute, because you're going to get a strong bounce, 20%, and then it's going to retrace. So you want to be out on that 20%. Things like 3 commas can be really handy for that as well. So you can set your trailing profit to say 5 or 6%. And when it bounces, bang, you're going to lock in 18% or something like that. So it's a really handy tool for trading reversals. Basic technical tools needed, like supply, demand, RSI, CCI, and trend lines. However, a good understanding of candle patterns such as double bottoms, head and shoulders, and divergence are very handy to know. So again, just like momentum trading, you're looking for those candle formations to indicate a reversal. And the last one, retracement trading. Retracement strategies are based on the idea that price won't move perfectly in perfectly straight lines between lows and highs, and usually make some sort of a pause, consolidation, or a short-term pullback before returning to the trend. Generally, retracement traders will wait for the pullback and typically rely on Fibonacci percentages to judge their ideal position, with short-term targets to previous structure or resistance. So that's when you see a pump's already happened, you've missed the pump, but you're looking for that pullback to re-enter to catch, just to back to previous market structure. So this is also a form of scalping or breakout trading as well. It falls into a very similar category. So it suits the scalper or the day trader. So you've already seen a pump. You'll see the pump and you'll see that it's starting to pull back. You'll use Fibonacci retracements and, buy on your golden ratio between the 50 or the 61 sort of thing, or average in from the 38, 50, 61. and you're just looking for that short-term target, probably back to the previous high, as that's already been determined as a resistance. So you're not looking to hold on to the trade for a couple of days. You're only looking to take it back to previous structure. So you can't get these sorts of things mixed up. You can't be a retracement trader for a long-term position, because there's a good chance a retracement's only temporary. So we're going to retrace, we're going to hit that resistance again, and then it's going to fall down. So you can't sit there and sort of hold on to it for too long. So it's not ideal for swing trading. This retracement trading normally happens in the middle of the swing channel, which is, as we know, the middle of a swing channel is a no trade zone. So you wouldn't use this in a swing trader's handbook. This strategy is often used for scalpers and day traders, and generally requires a bit more attention than other strategies, and can be used on smaller timeframes. Basic tools like trendline, support resistance, RSI, Fibonacci are used. So, does anybody have any questions there? And is there anything that people may have missed or can put themselves into the correct categories and stuff like that? I'm just going to quickly go to the messages. All right, where are we? All right, yep. Ads is a swing. I'm a swing. Most people are swingers. Yeah, I think swing. I reckon, as I said before, a combination of position, swing, and scalping is good. So position traders, everyone's going to have that long-term portfolio that they like to keep. Swing trading is probably going to be the most profitable for you. And scalping, if you've got the time, you can scalp anytime. That's the beauty of scalping. Oh, sorry. When I say anytime, you can take days off from scalping, and then just, on Wednesday nights is your scalp night. And you might jump on the computer at 2 o'clock in the morning and have a scalp. Whereas swing trading, you're probably always going to be swing trading, but again, doesn't it take some time off? MJB, need to learn swing better. Yep, we'll get into that. Ben's a hopeless scalper. If you're not having much luck scalping, bro, then maybe zoom out a little bit and try something different. Try swinging. Try day trading, something like that. Steve-O, definitely more successful as a swing trader. Scalping become more of a gambler instead. Being disciplined, yeah. Swing trading is much better for discipline and patience. And I think that will resonate into the rest of your trading as well. So I think getting a full, strong grasp on swing trading will better the rest of your trading as well, and the way you chart things. It sort of takes a lot more emotion out of things. Trader Cobb is also, I believe, not too sure. You're probably talking about pump chasers. Ads uses supply, demand, and fib targets. I'm the same. I reckon that's probably the most powerful tool is supply, demand, and fib targets. It works on everything. Pretty much every coin, Forex. It's a really strong tool. Learn fib targets. I think Fibonacci was on this month's checklist anyway. So I think we will dive into Fibonacci extensions because it's something that most people probably haven't looked into. What is Heikinashi? Heikinashi is a different type of candle structure. So if we go to this chart here, I'll get a clean chart up for you. Let's go Neo. Okay. I'll get rid of these. Oh, Neo's a bit messy, to be honest, but we'll give it a go, see how it works. Okay, so this is your normal candle structure, how you've got your body and your wicks. So the open was here, price went down as low as here, it went up as high as here and closed here. So that's what that candle tells. It tells a story of where price started, where it went, and where it finished. A little doji like this indicates the price started here, we went all the way down, we went all the way up, and then closed back where we were. So that was an indecision, or that was actually an evening star almost. So we had a sell-off there. So that's your normal candle structure. It tells the story of price movement within that 4-hour time frame. When you go Heikin-Ashi, it actually uses the average between each candle. And it's used to identify trends. So you can see here how it takes away a lot of the noise. So if you look at this area here, we've got downtrend, uptrend, downtrend, uptrend. It's very, very clear to see. Whereas if you go to normal candle structure, there's a couple of red candles in there, there's a couple of green candles, and the price movement's a little bit more erratic. In here where you see lots and lots of different colored candles, where if you put that on Heikin-Ashi, it'll probably smoothen that right out. Oops. All right, and we've got a downtrend, an uptrend, downtrend, uptrend, downtrend, uptrend. It just clears everything out. Now, the way to read how strong the momentum is by reading the lengths of the candles and the wicks. So a strong downtrend, you've got the body and then a long wick down. I know it doesn't sound right because normally a long wick down would be a bullish sort of indication, but the long wick down shows that it's a strong downtrend. As the candle body grows, that shows that it's got even more momentum. So if you entered a short here and it's going down like this, as you see the candles growing, you'd be staying in until you saw a shorter candle. All right. When you see a shorter candle, that shows you that downtrend is lost momentum and we're most likely going to reverse. So your short may have been something like, so you've seen an uptrend, which a bunch of dojis. So that was an indecision, and then the market's decided it wants to go down. So if you entered even here, which is pretty late, you've come all the way down here, and then we've bounced back, and we've seen that this downtrend has lost momentum. So that was your trade. All right, so you're not catching the top and the bottom, but you're catching that momentum from the candle. So in the uptrend, it's the opposite way. So you got the body with the wick to the upside. You can see how we sort of lost a bit of momentum. So you might have been getting a little bit wary here, but then we gained momentum and it got bigger. As the candles got smaller, that indicates that that's the end of that trade. So as you closed your short, you may have entered a long as we were seeing a reversal on the trend like that. And then you probably would have got out here as you saw the trend starting to lose momentum. So it's really good for momentum and trends. So that would suit momentum trading and trend trading. Or day traders and things like that as well. Very, very handy, but some people chart off the Heikin-Ashi. I tend to just use them to identify trends. I won't use them to chart. I'll use normal candles to chart because, Michael, ATR is an average true range. Moving 2 to 1. Always burn myself scalping. Yeah. If scalping doesn't suit you, Jordan, just don't do it, man. If it's something you want to learn, by all means, learn it or paper trade it. Jump in with Jack, see how he does it, and just do some paper trading for a while and see if you can get the hang of it. If it doesn't interest you, don't bother. If you're successful swing trading, stick to that. Yes, Ben, scalping is a rush. It is fun. It is fucking hella fun. Yeah, Brad makes a good point. Scalping is not the best way to be long-term. That's why I said I like to scalp every now and then, but I wouldn't predominantly be a scalper trader. A scalp trader is probably more likely to have a lot more emotional anger trading and more likely to lose all his money, because if you start having a bad trot or if something goes wrong, that account will just get lower and lower and lower. So it's more, I preach this a lot, to not put too much money in your Mex account and just have a bit there, $500, $1,000, whatever. And predominantly the majority of your amount of coins will be on your Binance account or whatever. So you do your swing trading there, and then you'll do your scalping every now and then with just a smaller amount. You can still swing trade with leverage, but you'd be using lower leverage. Hey, Ty's here. Rather than being 5 different types of trader, try and focus on one along with the salt. Yeah, that's it, man. But I think what's important, and I'll ask this question in a minute, how many of you didn't realize that there was so many different styles of trading and have been approaching your trades not realizing that you're mixing things up a bit. For example, you might be, thinking long term and you're buying on retracements or something like that. So I want to know what you guys think. Yeah, good stuff, Smallies. Glad you're learning something, bro. Venge, which Hycanash are you using? I was only under the impression there's one. You click up here on the candles and you got Hycanashi here. That's all I use. I know there is other forms down here, but yeah, just Hycanashi. Yep. Yeah, I thought swing trading would suit most of you guys. Because let's face it, most of you guys probably have full-time jobs. You're not full-time trading. If you're full-time trading, you would probably use a combination of all four. You would probably have a long-term portfolio that you manage over time. You would probably have swing trades on that last probably a week. You'd probably be day trading at the start of the day, and you'd probably be scalping while your trades are doing nothing. Like, you'd use all four. But for someone who has a job, you're not going to be able to do all four. You cannot concentrate on all four. Stick to one at a time, or just two or whatever, when you got the time to do it. And it's important not to be doing too many things at once. So don't have a swing trade on, don't have a day trade on, and don't be scalping at the same time. You will fuck yourself. You won't know what's going on. You'll find yourself just keep making mistakes. Scalping is my jam. Jack the Scalper. Full-time job and 3 kids, not so much left yet. That's it. All right, so I'll ask that question again. I want you guys to answer it. And how can I put this? How many of you have not realized that you're trading multiple strategies in one hit and sort of confusing yourself a little bit? Yeah. Paul, Ben, Smiley, yeah. Now, do you reckon if you approached that a specific trade using only one strategy, you might see things a little bit differently? And it might be hard to do it, but if you could go back and look at a previous trade that went wrong, but then apply yourself with one specific strategy and tell me if you think it would have been profitable. I know it's a little bit hard to try and do, but just, if you've got the time and it can be stuffed, just, humor me. Go back through one of your trades that you've probably looked way too much into it and applied way too many things at once, not realizing that you're looking at 50 different things and making a decision with conflicting information. Whereas if you just stuck to one style of trading, would that trade have actually been, I've just gone blank, profitable? Yep. Keep it simple, stupid. And that's why scalpers tend to just look at trend and maybe support and resistance, because if you overcomplicate a scalp, you will not be successful. You need to keep it really, really, really simple. You're just looking for that 2% drop. Yep, nailed it, bang, you're out. That's it. Keep it simple. And the others all are the same way. Swing trading, keep it simple. Supply and demand, bang, there's your channel. You've got to buy at the bottom of the channel and sell at the top of the channel. You can't get much easier than that. Ben, stop markets with scalps? Yeah, you normally would. I recommend anyone who's leverage trading to always run stop losses. Even if it's like, a 50% stop loss, with your leverage added onto it, you got to have stop losses on, man. Don't get liquidated. Never been liquidated. Rightio. I think that's pretty much everyone's there. Rightio. I'll get into the next part, which we're just going to go. Can a stop be put on with an order?
Depends on the platform.
Oh yeah, okay. Can stop. Okay, so yeah, it depends on what platform you're using. For example, if you're using Binance and you're buying an altcoin, you can put a stop loss on. By all means, there's the function in the exchange to use that, but you can't put a profit take on. Then you've only got a stop loss on. So overnight, let's say you put a stop loss on, but you've got a target of X amount of dollars, and overnight it actually hits that target and then comes back down and hits your stop loss. Well, then you just potentially lost that, say, 10% gain and ended up selling at a 2% loss. Whereas, if you're using something like 3 commas, you could have your stop loss in place and a take profit. So overnight, if the price went up and hit that mark, you would have taken the profit and your stop loss would have disappeared. Yes, you can on BitMEX. Yeah.
You can on Forex, BitMEX, anything with leverage, I believe you can do it.
Yeah, so when you chuck an order on BitMEX, you can put a limit profit order, and you can also put a stop limit order. Stop limit, stop market, whatever you want to do. Just make sure when you are on there, there's a couple of boxes to tick. And if you go through on our video, I think that we did on the BitMEX run through, I mentioned it there. I'm not too sure whereabouts in the video it is, but there's a couple of boxes to tick under the order form. There's one box that specifically says reduce only. So the reason you want to hit reduce only is because if you have a stop loss order in and a profit take order, when one of them hits, the other order will still stay in the book. And if it's not on reduce only, it'll actually buy more contracts on whatever direction that's going. So if you don't have reduce order, it will buy more contracts instead of just closing. If you have it on reduce only, then regardless of which one hits, the other one, it may still be in the order book, but it won't execute. So when the trade actually hits, it'll just cancel it. Is the video on BitMEX in the live session replay? I think it's in the resource page. Let me have a quick look. Resources, UTG guides. Yep. If you go to resource category on Discord and click on UTG guides, the second download available is the complete BitMEX beginner guide, and we run through all that sort of stuff in there. We have done a video on it, but I think we're redoing it at the moment because obviously it was done previously and we wanted to clean things up a bit and give it the UTG branding. Mm-hmm. Yeah, that's right, Jack. Yep. Cool. All right. Moving on. Now, I think I've got to do this one now. Right, yeah. Can you all see this? Trade plan checklist?
Yep.
Yep, cool. All right. Now, we're going to just do a brief run through on this now, and then on next Tuesday, we'll go over in a little bit more details and try and see what you guys come up with. But this is the basic trade plan checklist. So before taking a position in any market, you should always have a checklist or a set of rules to follow and stick to. This is called a trade plan. Oops. At first, it may help to write things down or type them up and have something stuck on your wall next to your computer or something like that. But as time goes on, it will just become second nature and you won't need the visual representation to follow. So Ty's made this lovely PDF for you guys to fill out. And to begin with, obviously, if a lot of you guys don't have a trade plan, it's going to be really helpful just to fill it in and stick it on your wall. Print out 10 copies of them if you want, because each trade plan will suit a different style of trading. So you got to remember that as well. Fill in the details, stick it on your wall, and just keep it there when you go to make a trade. Just have a quick look at it and go, yep, I've ticked all my boxes, let's go. And like I said, over time, these sorts of things will just come second nature to you. You won't need to read off a sheet. You'll just know in your head, hey, before I place this trade, what's the volume? Hey, what's this doing? Blah, blah, blah. As there are different types of trading styles, they will require different steps to your checklist. Generally, the longer trades that take position trading or swing trading will require more research that you need to do, whereas scalping and day trading requires only the few basic steps to check your boxes. So obviously, if you're position trading, you're probably going to want to do a little bit more research rather than your technical side of things. You're probably going to want to do a little bit more fundamental research and maybe token metrics and things like that. Whereas scalping, none of that shit really matters. You're just trading the technicals. You're looking for small time frame movements, and you're not too concerned where the asset's going. You're just looking for price action. Rightio, let's jump into scalp checklist. Okay, so here's some things that I've noted down. I'm not saying this is the rules. It's just some things that I like to stick to, and this you can then incorporate this with your technicals into Ty's checklist, which we'll work out a little bit later. So, is the market liquid? Ideally for scalping, you want high liquidity. Daily volume should be at least 50 million. So this is US dollars. So scalping, you're really only going to be able to scalp coins with a lot of volatility and a lot of volume. So coins like BTC, ADA, EOS, Ethereum, LTC, pretty much everything that's available on BitMEX is going to have that volume and liquidity for you to actually successfully scalp, because the price is going to be up and down, up and down, up and down, and you're going to get those small movements, whereas a lot of other coins might progressively just go down, and you sometimes don't get the chance to recoup a loss or recoup a bad trade. So, for example, if you're using lower leverage on BTC, you chuck a trade on, all of a sudden you're 13% down. If you just wait a second, the price will probably come back up and you'll be 12% up and you can exit, right? Whereas a low liquidity coin or a different type of alt a different alt or something like that, you're probably less likely to be able to get out of a bad trade, so you'll either have to sell at a loss and things like that. Make sure the market doesn't have any serious fundamental setbacks. So whatever asset you're about to trade, just make sure that there's nothing going on. So for example, BCH, you wouldn't jump on and start scalping BCH, not realizing that there's a good chance that this thing's about to eat shit. However, FUD can fare profitable if shorting. So you may have tried to jump on a scalp or a low leverage drop on BCH when all that bullshit was going down because of the fundamental issues. So it can prove profitable, but at the same time, if there's dodgy shit going on, probably not the best idea to buy it, because the movement could be erratic. You'll generally start with the 4-hour time frames to get an idea of market direction and sentiment. So you need to, with scalping, you don't just jump straight into the 5-minute time frames and start looking for trades. You still need to have an idea of where the market's going. So if the market's quite bearish over the next couple of days, you might be looking for short opportunities. Whereas if the market's sort of sideways and ranging, you got trades either side of the channels, longs and shorts. If it's a bullish market, you're probably favoring long positions. Work your way down to the 15 to 5-minute candles to find possible trades. So as I said before, do your basic charting based on scalp trading to find potential trades. If there is no trade set up, move on. So with scalping, you'll generally always find something unless the volume's really flat and the price hasn't got much action. At the moment, there's tons of action because the prices are so low. So you'll generally always find some scalp opportunities as long as you're going to get them right. But with this price action, sometimes you get it wrong. So I suggest lower leverage and waiting for the profit and then take it. So when I say do your basic charting based on scalp trading, that's using your trend lines, support and resistance, RSI, things like that. If there is a trade there, stick to your plan, set your buy orders, have a stop loss with that mark underneath it to say don't forget your stop losses, because it's very important when leverage trading. If you don't run stop losses, you will get liquidated if you get the price wrong, if you get the trade wrong. Stick to your plan, set your buy orders, have your stop loss price set, and take profit zones. Do not deviate and get greedy. So you always have to have that plan in place before you place a trade. So you need to know, okay, if price breaks down here, I'm going to set my buy order here, and this is where my take profit zone is, and my stop loss will be here. So you should already have that in place. You know where you're buying it, you know where you're selling it, and you know where you're going to stop it out. You don't buy something and then go, where's this going to go? You need to know, you have to have that plan in place before you start. Otherwise, you'll get confused with the price action and you'll end up fucking yourself. So have that plan in play before you start. Don't get greedy. So when you have your take profit zone in there. So when it reaches it, you take profit and you're out. Even though if it drops further or if it goes higher and you would have made more money, you don't sit there and go, well, it does suck when you take 20% and then you see it do 40%. But at the same time, you've locked in the profit and that's what you were that was your plan. You've already planned to make that much money or lose that much money. You've successfully made the money you want. So don't kick yourself over it. Okay, so that's a basic form of scalping checklist. So looking on Ty's form here, indicators. So you could probably put up the top here where it says my trading goal is, let's just say you put this as scalping. So this is your scalping checklist. Indicators I will use. What indicators are you going to use for scalping? Probably RSI, maybe MACD, possibly. You probably wouldn't use much else. What time frames am I trading? Make a note there. Start on the 4 hour, okay? And then under that, maybe drop down to the 30-minute channels and then, 30-minute candles, and then into the 15 5-minute candles. So that's the time frames you're going to trade. Times I trade. When are you going to do some scalping? At night. You want price action. So depending on where you are, what I'm saying is you want the American price action. So for me in Melbourne, that's around 2 o'clock in the morning. So what times am I going to trade when I'm scalping? Probably 2 in the morning, or between 12 and 4 or something like that. Okay, what I'm looking for. Okay, I'm looking for a trend. I'm looking for a trend that's being respected. I'm looking for the break-in trend to short, or I'm looking for resistance. I'm looking for a double top to hit resistance and a rejection. I'm looking for generally those breakouts or the breakdowns or the breakups and things like that. So what am I looking for? I'm looking for trends. I'm looking for support. I'm looking for resistance. I enter when? When do you enter? I enter when support doesn't hold. I enter a short. If I'm looking to trade a breakdown on trend, when do I enter? I enter a short when we break trend. We push up through resistance. When do I enter? I enter on the pullback on resistance. I exit when? Generally on scalping, you're going to be exiting to market structure. So say on a breakdown from a trend, you'll probably just be going back to the next lot of support, which might be a 3% drop or something. So if you're on leverage 5 times, 10 times or whatever. So I exit when I hit previous support or I hit previous market structure. Money management. What's your risk to reward ratio? Okay, so you need to have something in mind of your risk to reward. On scalping, your risk to reward is going to be pretty even, like probably 2 to 1, which is, in my eyes, this is why scalping is quite dodgy and gambling, because the odds are pretty shit. Right, 2 to 1 risk to reward ratio minimum. If it's less than 2 to 1, you probably shouldn't be taking it because that's a big fucking coin toss. Maximum dollars I trade. So with scalping, you're not going to fucking leverage your whole account, right? You're not going to put 20 grand in. Well, unless 20 grand is nothing to you, but your maximum trade, have something that have a figure in mind that you always use when scalping. So for me, it's generally $100. Okay. So if I'm scalping $100, I'll break my trade up into $100. If it goes to shit and it looks like I can, dollar cost average into a better position, I'll chuck another $100 in. I'm happy to do that. I'm happy to put 200, 300. I'll go up to $500, but I'm not going to put, I generally only leave about $1,000 in my account at a time. If it gets more than that, I'll pull money out so that I've only ever got $1,000 in there. That way I can't wreck myself if I have some emotional issues. So, you have that base price that you will only ever play with. You're only ever going to put $100. That's my maximum. Right? You put that in, and that can be different to whatever you are. If you're playing with 10 grand, your maximum might be $1,000. If you're playing with $500, your maximum might be $50. I generally recommend about 10% of your BitMEX account would be an ideal maximum trade, because you've always got that option to possibly dollar cost average out with another $50 and get that better position and get out of the trade. So that's a basic checklist for scalping. And that's sort of how we fill in our cheat sheet. And you can see here, Ty's put a couple of things on the bottom. Stick to your plan, back yourself, don't ever FOMO. So stick to the plan. You've got your plan in place. You're going to fill that out and you're going to stick that on your wall, and that's your scalp plan. So whenever you go to scalp, you need to look at that checklist and say, okay, am I using this? Am I doing that? Where am I entering? What am I looking for? Where am I exiting? Yep, that's my risk to reward. Yep, sweet. Maximum trade, done. Stick to it. Back yourself. You need to back your TA. If you're not backing yourself, then maybe you shouldn't be taking that trade because you're not confident that your trade's actually going to play out. So your risk to reward's turning into a coin toss rather than possibly a successful trade. Don't ever FOMO. If you jump on MEX and all of a sudden you see a big red candle, don't go, oh, I missed it. Quick, jump a short on. You missed it. Wait for it. All right? Don't ever FOMO. Okay, next one. Day trading checklist. Now, this is fairly similar. They're all fairly similar, just a few little variations. So for day trading, so remember we said day trading, generally charting the night before or in the morning. And you're placing trade on and you're looking to close it at the end of the day. You're generally only going to hold a trade for during the day, maybe a day or a day and a half or whatever. You're not going to hold the trade for that long. You're just looking for that small 10%, 15%. You might have bought on a retracement and you're just waiting for it to hit market structure again to get out. And that's it. That's your day trade. Okay. Is the market liquid? Again, just like scalping, but a little bit less. It doesn't need anywhere near as much volume for scalping because you're actually looking for a bit more price movement rather than ups and down trading like 0.5% channels. So ideally for day trading, you want a reasonably high liquidity. Daily volume should be at least 5 million. So again, jump on your coin market cap, check on the first page. There's plenty of coins there over $5 million in 24-hour volume. Make sure the market doesn't have any serious fundamental setbacks. FUD can be fair profitable when shorting. So as before, make sure there's no dodgy scandals going on. The founders are dumping their coins or fucking anything like that. Make sure there's nothing like that going on, because if you don't pay attention to fundamentals, you might see a setup for a buy or a long position, not realizing that everyone's about to dump their coins because they just sacked their CEO or something like that. So pay attention to fundamentals that can change the direction of your trade. Is there any positive fundamentals at play? Announcements, partnerships, and milestones and things like that. Mainnet launches or something that's quite often meetups and things. Those sorts of things can be positive for your trading. You can possibly buy the rumor, sell the news. So if there's an announcement coming up, there might be a bit of a rally. So that might give you an option to day trade that rally. Start with the daily timeframes to get an idea of market direction and sentiment. So you're going to probably start on the daily just to see where we are. If we're seriously overbought on the daily, you probably wouldn't be looking anywhere to try and find trades. If we're oversold on the daily, you might be looking to jump in because there's probably more likely to see some price action. Work your way to the 1 hour and 30-minute candles. You can by all means trade the 4-hour candles, but with a day trade, with a day trading style, you're probably going to be looking at the 1 hour and 30-minute candles because you're scalping a little bit more. You're looking for pullbacks and things like that. And sometimes those sorts of movements and candle formations are a little bit hidden in the 4-hour. So, for example, sometimes you can see a pump on the 4-hour, not realizing that if you chuck on the 30-minute candles, there's actually a pullback in the middle of that 4-hour candle. So just, drop down to the small time frames. Basic charting based on day trading and find potential trades. If there's no trade set up, move on. So basic day trading, which is support and resistance, trend lines, things like that, Fibonacci retracements and all those sorts of things. So then you would look at, depending on the coin and what it's doing, you might look at your momentum style strategy or retracement strategy, reversal strategy, things like that. Check similar markets or competitors for possibly a better trade setup. So if there's a coin out there, like in crypto world, if there's a coin out there that there's kind of duplicates of, something that someone's doing something very similar. Let's try and think of an example right now. Okay, you got Dash. Dash is a privacy coin. You've got Monero, I think, is a privacy coin. You've got Verge, they're a privacy coin. So you've got 3 privacy coins. And I think there's some pictorials somewhere that show how a lot of coins fit into certain categories. There's coins that just focus on smart contracts. There's some that are just money. some that are used for their tokens, utility tokens and things like that. So if you're looking at a specific coin, see what other competitors are around. Competitors are around, and see what their trade setups are like as well, because there might be something brewing on a competitor's chart that looks maybe a little bit better. Consider the risk to reward ratio and the higher probability out of the group that you're going to check. So and choose the best one suited to the day. So like I said, if you're going to look at maybe a bunch of coins, check to see which one has possibly the best risk to reward. One that looks like it's probably got the higher probability. Maybe Verge has a better risk to reward ratio, but fundamentals are a bit shit because fucking they're a bit loose. And then you've got, say, Monero. The risk to reward might not be as good, but there's probably a higher probability of it playing out because they have an announcement coming up or something like that. So you've got to go through a few things and work out which one's probably going to be the best one to trade today. If there, as before, if there is a trade there, stick to your plan, put your buy orders, stop loss, take profit zones, don't deviate from your plan. So, day trading checklist. Again, print out another sheet, chuck day trading at the top. Indicators I'd use. So what were you going to use for day trading? You're probably going to use Fibonacci. You're probably going to use RSI and MACD. You might use CCI. What else? Ichimoku, all different things. Time frames I'll trade. Start on the 1 day, check the 4 hour, jump down on the 1 and 30s. You're probably going to be trading on the 1 hour and 30s, but you want to see what way the market's going on the daily and 4 hour. Times I trade. So on a day trading, if you're going to be trading the American time frames, then you're probably going to be looking to enter trades at, say, 3 o'clock, 4 o'clock in the morning. In the afternoon, and you're probably looking to exit trades 6 o'clock in the morning or something like that. What am I looking for? You're looking for double bottoms. You're looking for pullback zones. You're looking for support and resistance, things like that. You're looking for breakouts, good bounces off support. You're looking for rejections off resistance, things like that. I enter when, much like scalping, you enter when we enter a short off resistance or something like that. And I exit when, generally market structure or support resistance, something like that. If you're going to use Fibonacci extensions, but generally Fibonacci extensions are more suited to longer time frames. Consider your risk to reward ratio. So on day trading, your risk to reward might be a little bit higher, something more like maybe 3 to 1, 4 to 1, something like that. Probably a little bit higher than what your scalping is. And maximum trade, a little bit different. If you're leverage trading, again, stick to your $100 trades or your 10% of your account trades. If you're alt trading and you're just taking positions, then it might be a little bit more. You might chuck on $300 or $500 because it's not leverage, so you're not going to be losing. It's not going to be amplified, so you can put a little bit more on and go from there. So maximum trade, again, depends on your portfolio. If you've got 10 grand on your Binance account, you might do $500, $1,000, whatever. Depends how much you got. Everyone's going to be different. Swing trading checklist is the market liquid? Ideally for swing trading, you want reasonably high liquidity. Daily volume should be at least 1 million plus. The higher, the more stable the range. So you can swing trade lower market cap coins, lower volume coins, but it's going to work best on higher volume. So I said 1 million plus because for me, if it's anything less than 1 million, I won't bother looking at it, even though you could. I'm not saying it's not possible to swing trade anything lower. I'm just saying it's a higher probability for me to swing trade coins that have at least $1 million in 24-hour volume right now, currently. In the bull market, that's probably going to climb up. It's going to be a totally different ball game in the bull market, to be honest. Make sure the market doesn't have any serious fundamental setbacks. As before, you're not going to trade. You're not going to be looking to buy a coin on support that is about to fucking fail. So you have to pay attention to fundamentals. Is there any positive fundamentals at play? Announcement, partnerships, and milestones. So this can play effect with swing trading, because generally with swing trading, you're range trading. You're trading within a channel. Sometimes fundamentals can burst out of channel. So, for example, ZRX and BAT, we were trading that just before it got listed on Coinbase. So we were trading, swing trading channels and getting successful swings, and then all of a sudden it would bust past your swing channel. And then you'd have to go again, start another trade. So for me, I successfully traded both of those coins and made plenty of gains, but I didn't get the maximum gains because I wasn't trading it the correct way. I was swing trading something that I probably should have been maybe day trading, right, because of the crazy gains, or position trading, but probably not. So there is different forms to suit different things. And yeah, you need to pay attention to fundamental analysis, especially if there is an announcement or something coming up, because it's a good chance that your channel is not going to be as effective, and you're probably looking for previous highs as possible targets. Again, start with the daily timeframes to get an idea of market direction and sentiment, and work your way down. I don't recommend going any lower than, say, the 1 minute candle, the 1 hour candles, because you're really trying to find actual direction and movement on the price action. You're not looking for these tiny little entries. You're not looking to buy on pullbacks, and you're not looking to buy to the dollar and all that sort of bullshit. You're buying within a zone. So you're not buying on a specific support. You're buying in a specific demand. And that demand can be a range of 3%, or 4%. It could be a fair amount of range. So you've got to be willing to, as we do DCA, you buy at the top of the channel, you double down in the middle of the channel, and then you double down again at the bottom of the channel. And then you put your stop loss just below. Then you got a nice risk to reward ratio, maximum profit for minimum loss. Okay. Stick to the 4 hour and 1 hour candles, because you're actually looking for trends and direction, not scalping. Do your basic charting based on swing trading and find potential trades. If there's no trade set up, move on. So again, basic charting for swing trading, supply, demand, RSI, Heikin-Ashi, Ichimoku, whatever you want to use. Check similar markets and competitors for possible or better trade opportunities. So again, if there is something similar, or there's another coin that just literally looks identical market. So you might have, say, 3 coins that almost have the identical chart. And it does happen a lot, as you'll see when you check coin market caps during the day sometimes. You'll see how like the top 5 charts will almost all look identical. Okay, so they all look identical. So they've all got the same trade set up. And let's say they're all really good trade set up. Which one are you going to take? Right? You can take any one of them. You're going to take the one that's first on the list, the one with the higher possible volume, or you're going to take possibly the one that has some better fundamentals brewing at the moment, or there's a partnership announcement coming up or something like that. So you're going to have to sift through those coins that all have that similar setup and find which one has the higher probability of playing out, has the best risk to reward ratio, and is better suited to trade on that day. Okay, so if there's something that has a really good risk to reward, it has some announcements coming up, but today it looks shithouse, you're probably not going to buy that. You're going to look at something else. Or you might not buy anything. You might wait for that one to get to where you want it to. And then, as before, if there's a trade there, stick to your plan, set your buy or stop loss price set, take profit zones, and don't deviate. So back to the sheet here. Indicators I'll use: RSI, Ichimoku, MACD, CCI. Timeframes I trade, start on the 1 day, go to the 4 hour and the 1 hour. You don't really need to go any lower than that. You're not looking to scalp and buy pullbacks. You're buying bottoms. Times I trade, it doesn't really matter. If you're looking for that price action, then you'll probably be buying maybe midday and holding coins throughout a couple of days. If you're only holding for the day, you might sell the next morning. What am I looking for? I'm looking for bottoms. I'm looking for tradable channels. So you're going to use supply and demand to try and find where price is lifted out of the consolidation and where price has been rejected from another resistance or consolidation as well, or dropped from a consolidation. That'll form your channel, and then you've got your bottoms and your tops, or your buys and your sells. I enter when price gets down to the channel. I exit when price gets up to the top of the channel. It's that simple. It's the most easiest form of trading. It's the most rewarding trading. risk to reward is high because you're generally shooting for 30% for a loss of 2%. Your risk to reward ratio is 20 to 1, 15 to 1, 10 to 1. It's killer. Maximum dollar trade, again, depends on your situation. That could be $200, $50, $1,000, up to you. Depends how bullish you are on the project. You might go pretty deep into it and go 50% of your portfolio if you really think it's going to play out. You want to be sure of your TA, though. Back yourself. And now there is one last, which is position trading, but I'm not going to go into it. I haven't done one for it anyway. But position trading, I will probably go over this on Monday when we dive back into these checklists and trade plans, because I'm going to go over a few other little things with you guys, which is index funds and long-term trades and people who have HODL accounts and shit like that. So we'll go into position trading on Monday, and we'll go through a checklist on that. It is a little bit longer than these checklists because there's a lot more checks you want to do fundamentally. You want to research the team. You want to make sure that the founders are sound. You want to know token metrics. You want to know if the founders have got tokens locked up for a certain amount of time during the ICO periods. You want to know how much money was raised during the ICO period. You want to know how that money's been allocated. You want to know if there's big time investors who could possibly dump coins on it. You want to know if there's market manipulators or influencers. There's lots of things you need to do with position trading. A lot more fundamental analysis than technicals. The technical side of it's very, very basic. Really, if it looks cheap, then you'd be buying. If the coin checks all your boxes fundamentally for a long-term hold, really all you're doing with your technicals is making sure that the price is cheap. Like it doesn't really matter because fundamentally you believe it's going to go somewhere. If it's already at an all-time high, you're probably not going to buy it, but that's how it is. Any questions?
The next lesson is going to be on Tuesday, not Monday, right?
What did I say? Monday? Yeah, sorry, Tuesday. Let's do Tuesday. Any questions?
Not from what I can see.
No.
Someone wants to jump in.
Feel free to unmute your mics, guys, and say what you want to say. Everyone's falling asleep. Why that boring?
Just a little.
I talk too much.
It'd probably be a little awkward if you didn't talk.
Yeah, I know.
Yeah.
From what I got from it, everyone seemed to have a fairly good understanding, and
yep,
they've enjoyed it. So,
see, lots of questions. All right, I will ask something though for all the new guys who have only just started with us this month. I know we haven't done a lot so far. We've only had 2 sessions and they've been a little bit different than we normally do. Not so much on the technical side of things, but how's everyone finding it?
No, they'll hate it.
No, I hate it. Yep, sleeping. Yep, in fact.
I guess if no one replies, you can put that down to they don't want to do anymore.
Shake it up a bit. That was really good. This is open last time. Yeah, cool, man. That's good. Glad you got something from it, dude. It definitely takes a little bit to get your head around it, but I think once you identify that there is different types of trading, I think you'll apply yourself a little bit different when you're charting next. And just go through those checklists before you start doing things. There's something else I like to do, which, well, I've done it in my head. I need to probably write it down or type it up somewhere, is you can pre-do these checklists with specific coins, and then you don't have to go through these checklists all the times. So you could go do some fundamental research on a bunch of coins and take note of like, yep, these coins have got plenty of liquidity, like always got plenty of liquidity. The fundamentally they're kicking goals. They've got a working product. There's no bullshit that goes with them. They're a strong coin fundamentally. They tick all the boxes. Then you really don't have to do your checklist all the time. You put that coin on your watch list sort of thing. Like that's a coin that you're always looking to trade. And for me, that's coins like ZRX and BAT and BTC and things like that. You know, I'm always looking at those coins because they tick all my boxes. I'm happy to trade them at any time as long as there's a trade there for it. So I'll always look at those coins on a daily basis and go, is there an opportunity? Nah, all right, I'll come and look at that in a couple of days.
Just on Arlene's thing there, like you must decide what trader you are before entering a trade. I guess I feel like when I was trading, you don't really decide what trader you are. It's kind of like what mood are you in?
Yeah.
How are you feeling today? Are you looking to enter a long-term trade? Are you looking to just scalp a trade?
Yeah.
You need to, kind of feel yourself out before you find out what kind of trader you are for the day.
Yeah, for the day. That's probably the biggest part there is for the day. You don't have to be a swing trader only and only trade only swing
that's
trade.
right.
I mean, you can if that's what suits you. Then
if that's your jam.
Yeah, but you can be a swing trader on Tuesday and a scalper on Thursday. It doesn't matter. You just have to approach your trading styles determined on what type of trading you're about to do. Don't enter a swing trade with scalper mentality, or don't enter a swing trade on a pullback because you're not buying in the right zones. You're buying on a pullback. You're breakout trading or retracement trading. You're not swing trading.
Yeah, she was just talking about that specific trade.
Yeah, cool. Well, that pretty much wraps it up tonight, guys. We haven't really got too much more to go over. We might do, is everyone keen for another quick market scan to suss out the market? Anyone got anything they want to look at before we log off? And you will get copies of the PDFs and stuff in the resource material as well. BTC is barting again. Fuck, it's always barting.
Barted.
Let's go XBT this time. Oh, not ZBT. Oh. Yeah. So that bullish engulfing didn't last very long, did it? How many people did you see on Facebook today after that big green candle? Oh, we're bullish again. Apparently there's going to be a fake out in the next 24 hours. Jack, I've heard from another source who we have who mentioned us to stay away from crypto for the next 7 days. I don't know what, he didn't go into many details. He didn't explain it to us. But I've heard from a few sources the last couple of days that there's going to be some crazy shit happen. So I'm thinking, let me just have a look at the shorts at the moment. I reckon there could possibly be a squeeze coming up with a big drop because I dare say there's probably plenty of shorts in the book at the moment. So when people say, stay away, I think what they're trying to say is if you don't know how to trade properly, just, watch out because you could end up getting mick-fucked. And looking at this, shorts are back to all-time, or nearly back to all-time high. So I'll put that circle probably a little bit off there. So with the shorts screaming back up to that all-time high again, I dare say there's going to be a squeeze. So when people say stay away from crypto, that probably means don't go stick a short on right now because there's a good chance we might get a nice big fucking longin followed by a nice even bigger redder. So, yeah, there's your warning, I guess. Be careful. Can you explain a short squeeze, please? Oh, well, you can have a short squeeze or a long squeeze. So a squeeze is technically, right now, this is the shorts chart. So this is BTC USD shorts on Bitfinex. So this tells you roughly how many people or like a generalization of the amount of shorts currently in the book. So there's more people, if I put on longs as well, you can see the difference between who's doing what. and it gives you an idea of market sentiment in terms of where the gamblers believe BTC is going. We go longs. Okay, so put that on the. I'll go to the daily. It's a bit easier to read on the daily.
So nasty.
All right. So if you look at this, people are really bullish on shorting Bitcoin right now because we're climbing back to this all-time high. Every time we've got to an all-time high, you had a short squeeze. Now, if you look at longs, we're sort of, not really doing a lot. All right. So this is where you would probably be looking to short Bitcoin. If the longs are getting up here, there's probably going to be some short opportunities. Why it's down here, it's not really doing much, but you can see here there's plenty of shorts in the book right now. So with plenty of shorts in the book, that means there's lots of people gambling right now on betting that Bitcoin's going to go down. If Bitcoin goes down, these exchanges are going to have to pay out a lot of money because a lot of people have bets on that Bitcoin's going down. So it's in the banker's best interest to not have to pay these guys. So what they do is what's called a short squeeze. So a whale will come on, or one of the exchanges or bankers will come on, and they will pump the shit out of Bitcoin. They'll pump it up to fucking $5,000, right? Big green candle. What that will do is stop out or liquidate all those shorts, and you'll see this sort of movement. Right now, I'll try and put this in the book for you so you can see exactly how this plays out. So that was, we hit all-time high, 21st of August. Let's go BTC USD. What was it? Sorry, 22nd. Go on the daily. All right, 22nd of August. Okay. Yeah. 22nd of August. See that big candle up there, that big wick? You see how this red candle here went, that was a, well, let's say it started there, 6,300. That went up to 6.9. So at that stage, that was like a $600 candle there, right? That $600 bang did this. It knocked all those shorts out of the book. So that would have liquidated. It would have stopped out, or people would have just closed their shorts in a loss. Or, there may have been a small profit, or highly doubtful. That basically caused all the shorts to exit their trades. So now the bankers don't have to pay these guys out. All right. And then price moves up. The buyers come back into the market, right? And then what happened here? 4th of September. Here we go. All right, 4th, 5th of September. So all the shorts are starting to build again. So as price moves up in Bitcoin, all the shorts are rising back into the book. They're ready for it to drop again. And then drop down again. All right, what a squeeze is, they don't want to pay out all these shorts. So they'll cause a long wick, which will cause all these guys to exit their shorts. So when the price drops, they don't have to pay anyone out. And that will most likely happen again here. So there's obviously lots of shorts in the book right now. As it reaches up this all-time high, there's going to be tons and tons of shorts in the book. Bankers don't want to pay them out, so they'll throw in a big green candle, and it will stop everyone out, short them out. The bankers will take their money, and then they'll force the price down the way they want it to go. And that happens time and time again. And it's a dirty move, but it happens. And you have the same thing vice versa with a long squeeze. If there's lots of longs in the book, you'll get a big red candle, which will stop out all the longs, and then it will go long. And I reckon you'll probably find something like that as well. 25th of March. That would have been here. No, 25th of March. Where are we? Oh, what am I doing? 25th of March. So there's longs in the book, big red candle stops everyone out. So that would have been here. This rally here would have been all these longs building. All these longs building here because they're betting that Bitcoin's going up. As you can see, where was it? Bitcoin is going up. they throw in a red candle and short everyone out. Bang, 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 bang. And then it goes in the direction they want. Cheeky fuckers. So when there's a squeeze coming and you can see that a squeeze is coming, you probably want to be maybe not in a short, because if you are in a short, you'll probably get licked out. What's going on? Sound effects. Was I doing sound effects?
Yeah.
Yeah.
Sound effects.
You're like,
What's I doing?
and then you're like, bang, 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 bang.
I didn't even realize I was doing it.
No, it was good. It added to the, the whole show.
Yeah, it was good.
And made it a bit more dramatic.
All right. Let's have a quick look at Cap and see if there's anything coming up. Peter mentioned XRP. Are we looking on BitMEX, Peter? Most likely is. Yeah, it's looking pretty bearish. Not a lot of volume, tighten up. And we've got resistance here. Or if we're going to draw demand, it'll probably be from this guy. We've had plenty of touches on it before. So we're probably looking for this demand to get compromised for a drop. There's no real trade in it right now. If you're going to be scalping, this trend's sort of all skew-if, so probably go bodies. So price has been held down under that trend. And yeah, something like that. So there's going to be a movement here in the next couple of days as we go into a bit of a squeeze. So you'll be waiting for confirmation on which direction it's going. So this will be a scalp or a breakout trade. So yeah, you'll be looking for confirmation on where we're going from this squeeze, and then placing your trade accordingly, if you get a chance to. Yeah. Not too sure which direction it's going. I think it's got some downage to go. Looking at MACD, RSI's in the middle because we're ranging at the moment.
Have a look to the left for us.
We're on Z18, so there's not a whole lot to go off.
Oh, right, yeah.
We've only got that much market data to look at. But yeah, it's hard to say. Kaz wants to have another look-see at EOS. Are you on BitMEX, Kaz, or are you looking at BTC? Yep, BitMEX. I think there's a little bit more downage to go just yet. This fucking chart never changes, never stays. Yeah. I'll quickly chart it on BTC because we got no data for MEX at the moment. What we are looking for, or what I'm looking for, is possibly this demand down here. Something like that. Yeah, going by technicals, that's a nice strong buy. You're very, very oversold on the daily, which is a good bullish indication. There is, at the moment, there's still selling momentum at the moment. It's still increasing, so it might still come down further. As we see this momentum start to change, and it'll look just like this, where the red candles on the histogram start to go dull and indicate like buying volume coming in, and then we would be looking for a reversal. So yeah, technical side of it looks good for a long, but I don't know the reason for this dumpage. It could be whales dumping, because if there was no fundamental reason for that, I dare say it's whales dumping for some reason, and it does happen. You know, big time investors just go, you know what, I'm getting out of this shit. because the market's turned into shit. I don't want to be holding an altcoin that's going to lose even more value when Bitcoin goes down. Because that's something else you got to remember. When Bitcoin goes down, most alts will follow it in a loss of sats. Not only is it losing sats, the sats are losing value. So you double lose, if that makes sense. So, like I said, technically it looks like a good, strong buy, but there's possibly a reason for it to come down. So it's risky unless you know the reason for it. But you can see every time it's come oversold, we've had good bullish direction. Although here it pretty much struggled, but everything sort of struggled over the last couple of months or so while BTC was ranging and dropping. So not too keen on entering EOS yet until I see it do something down here. I want to see a really strong rejection, like a wick down here with a big bullish engulfing, and then it might be good for a trade. But you'll be watching this market structure here, because that's going to be something that it's going to have to pass through. So even if we do get a bullish engulfing, say if we drop down and get a nice big wick and we get a bullish engulfing and start to move upwards, here's where you're going to be looking to possibly exit if we can't break that. If we can't break this market structure, it's probably just going to fall back down. If it does break through, then you'll use your Fibonacci extension for targets. I'll just do a retracement on the downtrend. So let's say we're going to hit, I don't know, say something like that. You'll see how the Fibonacci lines up with a bunch of market structure. So your 23 line here lines up with market structure. Your 32 lines up with market structure. Your 50 lines up with market structure. Your 61 lines up with market structure. So there's your targets. You've got, if you go long, you've got 1, 2, 3, 4, 5, 6 targets sort of thing to hit. But yeah, risky at the moment. Pay attention to this demand. And if you want to check the price of that demand, it is, and where does it show it? Normally shows, there we go. It is between, say, 4.2 and 5.1. Anywhere around there is where you're looking for a strong rejection of support. Anyone got anything else they want me to look at quickly?
Looks like we're all good.
All good?
All good.
All right, we'll wrap it up, guys. Thanks for coming tonight. And haven't really set out any homework for the trade plans, apart from what I would like you to do is maybe print off a couple of copies. And like I said to you guys when I was going through it, chuck a couple of ones up for, do one for scalping, one for day trading, one for swinging. Write up your trade plans. I don't know, maybe take a photo with your phone and chuck them up into the homework section, and we'll go over it and see if you guys got the gist of things. You can have a different trade plan for any trading strategy, any trading style, a specific coin. You might trade a specific coin a certain way all the time. You're going to have multiple different trade plans, and they'll apply differently each day. So yeah, for the homework, fill a couple in, take some snapshots, chuck them up in the homework section, and we'll go over it. We'll talk about it on Monday and go over a few other things in terms of long-term investments, index funds, C20 coins, things like that. Yeah.
Excellent. Thanks very much, mate. Appreciate it. Thank you.
No worries, man.
All good.
All right, guys. Catch us later.
Thanks, guys. See ya. Have a good
See ya.
weekend.
See you guys.
Bye.